Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you're tuning in from. I am so grateful, thankful to be here again with you this morning. It's Happy Friday, the last trading day of the week. And of course, today is a very, very important day as we look forward to significant economic events from the US economic docket, which of course has a high tendency of affecting price action. So we are going to be taking all this into consideration while we get ready for the London and the New York session. The last 24 hours has been quite interesting, very, very interesting. Though we have been witnessing this situation where the US dollar has been range bound, market participants has been risk averse during the last 24 hours when it comes to the US dollar, and this is definitely as a result of the anticipation of the NFP data, as key players and majority in the market are looking out for clues on where price action is likely going to go depending on the outcome of this event. So we are going to be taking all this into consideration too. Then, considering today being the last trading day of the week, there is this psychological expectation that key players in the market will be closing their position, especially after taking a considerable price movement in a particular direction through the course of the week. And of course, on days like this, we want to be closing in some of their position, which of course would reflect on the chart as price action moving in the opposite direction of the prior leading price action. Coupled with this one is that major event, the NFP data, which of course will have a significant effect on the price movement. So we are going to be taking all this into consideration as well. And as usual, our analytical approach during our Forex Morning Mastery will revolve around using simple yet powerful parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insight into the historical price movements, and of course providing us with a clearer picture of the potential trajectory of the prices of the assets on our watch list for the week. So on our watch list for this week, we have been monitoring the USOilSPOT, the GBPUSD, XAUUSD, and of course the USDJPY. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to come together as a community in anticipation of both the London and the New York session. And during this time, we normally review our positions and at the same time strategically position ourselves in such a way that we can catch any potential trading opportunity during the London and the New York session. So once again, you are welcome on board, and whatever we do here is basically on the 1 hour time frame, as this session is basically a follow-up detail to the videos I shared during the course of the weekend on this particular asset we are talking about. So once again, you are all welcome on board. With that being said here, I think we should dive right into the business. I would like to get some feedback as regards to the sound quality, the video quality. If they are fine, please let me know in the comment section. I checked the previous ones, they are quite okay, but I was at least hearing some distortion, but no one told me about this. Please let me know in the comment section, as this will help us have a better experience out here. So I will be able to do the necessary adjustment to make things much more better. So thank you very much, guys, as I look forward to your feedbacks in the comment section. So I see your comments. Bill, good morning, Bill. How are you doing today? Glad to have you around. And I do take your comments as a compliment. Thank you very, very much. And I'm very, very glad you are around too. So, with that being said, here we shall be diving right into the business. And for those who have been with us here for a while, you know that the first thing we want to be checking on is the economic calendar, as we want to keep tabs with the fundamental aspect of the market. And by now, we all know how the fundamental factors often manifest on the chart in technical patterns and, of course, price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart. And with this information, we have a better timing, and of course, we can position ourselves in such a way that we can catch any potential move prior, during, and even after this event. So with that being said here, let's dive right into the economic calendar. And for today, well, yesterday we talked about the event coming in from the US and the United Kingdom economic docket. In fact, we had the interest rate decision, which of course came in just as expected, as we had a 25 basis point rate hike yesterday. And this is what the majority in the market were looking forward to. Anything outside this will have been a surprise and might likely have incited price movement significantly. However, with the development 25 basis point hike, we're still yet to get that traction that we're expecting that the pound sterling should get. Probably we should get something today. We are going to be looking at that one too as well. Then we saw the ISM Services PMI from the US economic docket yesterday, which came in at 52.7, a little bit lower than the economics projection, which was at 53, and of course lower than the previous data, which came in at 53.9, hereby giving us a negative variance of 0.15. Now, though this data is still above 50, which of course is the benchmark of a buoyant economy, we yet to get a significant traction in that regard. If you had monitored, especially on the gold, the USDJPY, and of course the GBPUSD, we saw how the market was sluggish, and I'm of the opinion that is because of what we are looking forward to today. So now today, Friday, August 4, we have two high impact events, both coming in from the United States economic docket. So the first one is coming in about 3 to 4 hours from now, and that is the average hourly earnings, the month on month, and of course the year on year for the month of July. So the average hourly earning is released by the US Bureau of Labor Statistics, and it's a significant indicator of labor cost inflation and of the tightness of the labor market. So a high reading is always seen as something positive for the US dollar, of course, and while a low reading is seen as negative. Now, from the previous data we have here for the year on year and the month, for the month on month and the year on year respectively, we have 0.4%, the previous data for the month on month, and 4.4% for the year on year. Now, the projection for the month of July is a little bit lower than the previous data, which is not something positive for the US dollar. So we are going to be looking forward to what the actual data is going to be on that one. Then simultaneously, we have the non-farm payroll, which of course is the major event for today, which everyone in the market is looking forward to. Even the Fed will be keeping an eye on this one, as this will determine if there's going to be an interest rate hike one more time or there's going to be a stall. So the non-farm payroll is released by the US Bureau of Labor Statistics, and it presents the number of new jobs created during the month of July in all non-agricultural businesses. Now, a high reading in this case scenario is considered as a very positive tone for the US dollar, while a low reading is considered as negative. Now, the previous data came in at 209,000, and we have an economics projection of 200,000 here, at that one too a little bit on the lower side. Though sometimes we used to have some adjustment coming in like 30 minutes before the event or 15 minutes, which could affect the outcome of the event. So we are going to be looking forward to what the actual data is going to be like on that one too. Will it be just as expected, below expectation, or beyond expectation? And of course, as technical traders, what we are doing here is to try and sniff the current market structure, dissect it to decipher opportunities using trend lines, key levels, and chart patterns to identify potential trading opportunity. Hence, we can be able to position ourselves in such a way that we can capture that move when it finally happens. So with this information we have gathered here, we are going to be taking all these parameters we've talked about into consideration while we review the current market structure. So I see your comment, Bill. Thank you very much. It's going to be a great day, of course. Richard Blackett, thank you very much. I really appreciate your feedbacks, Richard. You have been very consistent. Thank you very much, as you have been an ambassador of making sure that this experience here is wonderful. So thank you very much, Richard Blackett, and thank you very much to everyone. So with that being said here, let's dive right into the business for today. So as usual, the first financial asset we are going to be taking on today is of course going to be the USOilSPOT. And in fact, the USOilSPOT in the last 24 hours has been phenomenal for everyone of us in this community. In fact, if you had missed out on one, or probably if you had taken one single position, you will definitely be in significant amount of profit at this point, let alone taking all the 4 positions that we have currently running on this asset. Now, even in the last 1 week here, we have been very, very profitable as we took advantage of both buying and selling opportunities, which ended up very, very well for us. So before I go into the details here, I would love to go through how the week started for us so that we can have the background knowledge of how we got the idea of either buying or selling at every point in time. And this could also serve as an educational guide in understanding how price action works and how to use it to identify potential trading opportunities within the financial market. So let's rewind to the beginning of the week. So remember, we had our key level identified, had the $80 mark, which was the benchmark for the OPEC Plus members, as this is where they want the price to be at a minimum per barrel. Now, within that $80 mark, we saw how price initially started the week with a consolidation phase, as we saw price confined within the $80.20 level, and of course the $79.93 area to give us an insight into the level of indecision at that particular point in time. And in this community, you know how we do it. Whenever we have this kind of consolidation phase or flat channel, we want to wait for a signal, which of course will come either in the form of the breakout of the resistance line or this breakdown of the support line to give us an opportunity to trade. Now, with the situation in place, we had our stop orders placed, and of course we had our first buy position triggered when price action did break out of the $80.20 level, giving us our first buy position for the week. And remember, we capitalized on this move by adding more positions as we rode the move all the way to the upside. We had entries at levels such as the $80.50 level. We had entries at the $81 area. And of course, we added more at the $81.40, as you will see here. And then we had the final one at the $81.75 level before the bearish momentum began. And on Tuesday, was it Tuesday or Wednesday, we had more opportunities where we were using this descending trend line to guide our trading activity for that day, where we said if price breaks out, we want to be seeing an uptrend continuation. But if price remains below the descending trend line, then a breakdown of the $81.40 level will give us a selling opportunity. We also rode that move all the way to the downside. So it was quite a very profitable week for the first 3-4 days in the week. Now, during our live session yesterday, we were able to spot a simple setup that we said we were going to use to guide our trading activities for yesterday. And in fact, within that setup, we initially had a sell position running. And of course, the sell position was taken out, of course. And remember, we had this trend line, which we said we were going to be using to guide our trading activity for yesterday's trading session. And you know how we do it whenever we have this kind of descending trend line. We want to wait for as long as price action remains below the trend line, we feel comfortable in our sell positions while we also look out for more opportunities to sell. However, we agreed that if price action ever breaks out of that trend line, then it will be an opportunity for us to join a bullish momentum. And in that case scenario, we had a level, had the $79.20 level, which we said we are going to be using to capitalize on that bullish momentum. Now look at what happened at that confluence. We saw the breakout happen. Price came back to retest the structure on our lower time frame, giving us enough time to be part of that bullish move. And since that moment, we have been buying the USOilSPOT. In fact, we were able to maximize the potential of that move by adding more positions at the breakout retest of the key level at the $80 mark. We also added more position at the $80.50 level. We added one more at the $81 level till this morning. So we were able to scoop, I think, about close to 500 pips on all the 4 positions on that one. And for everyone who took advantage of this opportunity, at least if you are taking one, you will definitely be in profit by now. Well done to you for being on standby and patient enough to wait for the current market structure to mature before jumping into any position. So well done to you guys, and congratulations once again to everyone. So now, with that being said here, you know how we do it. When price action significantly moves in our favor, the next thing we want to be doing is to move all our stop losses to secure our position. Of course, I made mention of this during my commentary on my public platform this morning. So at this point in time, we want to be moving all stop losses. And for me personally, I'm of the opinion that we always want to give enough room for price action to breathe, just in case we could have some shakeouts, which might likely happen. And as a result of this, I'm of the opinion that we should move all stop losses anywhere below the $81 area, giving enough room for price action to breathe. So at this point in time, between that level 81 and the $80.70 area seems most appropriate. Move all stop losses to, and let's see how the market will react from this area. Now, with this being said here, with a well-secured position at this point, what is going to be our plans for today? How do we intend to capitalize on any potential trading opportunity, especially when we are anticipating the NFP data, which is coming up later in the day? So before we go into that, let's run through our commentary on the USOilSPOT today this morning. So for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten an update in that regard. So let's run through this quickly and let's see how we agreed that we are going to be managing our USOilSPOT trades for today. So right here on my TradingView platform, so this is how we have been managing our position since the beginning of the week. And let me see. Am I getting the right thing here? No, this is not it. Okay. All right. I think this is it right here. So this was my commentary this morning as regards to the setup. So I said we've managed to secure a solid 520 pips. That was what was the current pips at the time I shared this update across 4 positions as the trading market enters a range-bound phase ahead of the upcoming NFP data release later today. With this position locked in, we eagerly await further trading opportunities. Now let's go back into the live chat and see what is going on here and what I was trying to say. Now, I would like to zoom in, but before I zoom in, let me make mention of something here. Now, before I go into the current structure at this point in time, there is something we need to take into consideration here. Now, the first thing you would observe while looking at this from a zoomed out perspective is that that $81.75 level had been a very strong selling niche since the beginning of the week. And at this point in time, we are at a very crucial level where a significant breakout of this barrier will be a very good signal for us to confirm that buyers will be pushing price further to the upside. And if continued selling pressure persists around this area, we might likely be seeing another wave of bearish momentum, just like we saw right there on Wednesday. Now, look at this closely. You'll see the $81.75 level. We saw selling pressure around that area. Though we had a quick breakout of the structure, which of course never lasted long, as we saw price action come back, and that moment we saw that bearish move to the downside. Now, with the situation we have right now, price action is back into that area since the early hours of today, and in the last couple of hours we have been seeing how the buyers have been struggling around that area. Now, the question here is, will the buyers break through with the zone, or will the sellers still take over the market one more time, just like they have been doing since the beginning of the week? So this is a question we would like to answer, and of course, to do that, we want to zoom into what is really going on in the last, let's say, the last 10 hours to see how we can position ourselves for trading opportunities for today. So, and in that regard, if we also look at this impulsive move that started here yesterday, it's a very, very strong one. And I'm of the opinion that considering today is the last trading day of the week, there is always a likelihood that we could see some profit-taking activity ahead of the weekend. You know, the US oil market is a very unpredictable market where majority want to leave the market ahead of the weekend because of institutional trading, which might affect the influx of price action during the weekend ahead of Monday's trading session. And if that is going to be the case, then we might likely be seeing some sell-offs at some point in time. So let's keep that also in mind while we zoom into the current market structure. Now let's zoom right in. So we zoom right in, as this is going to be where our center of focus is going to be for today. Now, zooming right in here, I want to identify the support line of this range, which I think falls at exactly the $81.30 level. We of course want to identify that area and mark it out on our chart, as this is going to be another level we are going to be using as a guide for today. So we mark that level out, $81.30 level, right? So I'll give this a darker color, and then we place it at the bottom right hand side. Here we go, and then bring back our candle chart. Beautiful. So you'll see now that since the later part of the New York session yesterday, price action has been within this range, and that is $81.75 level, and of course the $81.30 area to give us an insight into the level of indecision at that point in time. And with this situation, I can relate this to the anticipation of the NFP data, which of course will be a significant factor in driving price movement on the US oil. We all know how the US dollar and the US oil move inversely proportional in price action. As in, the higher the US dollar is, the lower the demand for oil, and it drops price to the downside. And the lower the US dollar is, the higher the demand for oil, as because the oil prices will become cheaper. Those majority buy the oil with the dollar, and because of this, we will see price climb to the upside. Now, with this situation here, you know how we do it in this community. Whenever we have a range like this, we want to wait patiently for a signal in the form of a breakout, retest of structure for an opportunity to buy, or the breakdown, retest of the support line for an opportunity to sell. And considering the strong impulsive move here to the upside, and the fact that we have been very, very profitable on the US oil spot this week, we can afford to leverage on the profit we had made so far this week to test waters above the $81.75 level by having a buy stop order sitting above that structure to capitalize on an uptrend continuation. So of course we are leveraging on the profit we had made so far, so we don't have any risk at all taking any opportunity around that area. But if you are new to the US All Spot for today, for the first time you're joining us for this week, so that means you are coming with a clean slate, then I will suggest you follow the technical expectation. That is, a breakout of the structure should happen first of all. When you notice the breakout of that structure, then we scale down to our lower time frame, the 5, 10, or 15 minutes time frame, to look out for confirmations that sellers are finding it difficult to stay below the $81.75 level, and this would reflect on the chart as price retesting the $81.75 level. A couple of buy pressure will do fine to join an uptrend continuation. So you will need a confirmation if you are joining in with a clean slate for today. Now, stop losses, very, very important. Every trade we take is an educated guess, so you don't want to believe that this is surely going to be a buy. So you definitely want to have your stop loss to protect your portfolio against any sudden pullback that might likely happen here. So you want to be having your stop loss given enough room to breathe, of course, right below the $81.30 level, about 45-50 pips thereabout will do just fine, especially around this area where we have been noticing selling pressure since the beginning of the week. So that is how we are going to be looking out for an uptrend continuation based on this current market structure. Now, let's talk about the potentials the sellers have in this market. You know how we do it in this community. In as much as we're looking out for buying opportunity, we cannot ignore the potentials of sellers. And if selling opportunity comes in, we of course want to be on standby to capitalize on that move as well, just like we have been doing since the beginning of the week. Now, going back to that level here, remember I told you how this area has been characterized with a lot of selling pressure since the beginning of this week. And because of this situation here, we cannot ignore the potentials of sellers. And if we are going to join any bearish momentum here, what do you think we can see on this chart that will make us feel comfortable to change our bias from bullish to bearish? Now, if you look at this structure closely, remember I told you that we have a range here where price action is caught within the $81.75 and of course the $81.30 level, giving us a flat channel, and of course the breakdown of the support line will be an opportunity to join a potential sell-off in the market. Now, for me to sell, I want to see price action drop below the $81.30 level. So I will zoom this right in so that we can see things clearly. So I want to see price drop below the $81.30 level. Now remember, we are not jumping right in. We are not getting too excited here, as we would need confirmation that truly sellers have come to stay. And one of the things we shall be looking out for here is, first of all, a breakdown of the structure to happen, after which we will look out for retest of structure in our lower time frame to give us confirmations that that buyers are finding it difficult to climb back above the $81.30 level. And if that happens, we want to get ready to join a bearish move to the downside. So we want to see this, and this will of course reflect on the chart as price retesting the structure coupled with selling pressure below that area, after which we want to be joining a bearish move. And if price action continues to break down the $81 area, then we want to be maximizing, capitalizing on that bearish move to add more position to our existing trade. But with the way things are looking right now, I doubt if that will happen. But if it does happen, we want to be on standby to capitalize on that move. So this is my simple setup here on the US All Spot for today. If you do have any questions whatsoever, feel free to let me know. Then one more thing I noted here is a higher low which is observed here. You'll see, let me thicken this a little bit, which of course will also help us to gauge our positions on this one, and you know how we use our trend lines in this community. As long as price action remains above the trend line, we feel comfortable in our buy position, and not only when the trend line is broken that we can now start thinking of a potential momentum shift. So these are my views here on the USOilSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial asset. And I would like to take a little break. You will not be seeing me for a moment. I want to attend to my kids. They are seeking for an help right now, so I need to do that quickly, and I will be right back in a moment. Thank you very much. All right, so in the absence of no questions, I want to assume that we're all on the same page here. So we shall be moving right into the next assets on our watch list for today. So the next asset on our watch list, so we have been closed out at break even at this point in time. So let's see what is going on so far this week and how we have been trading the GBPUSD. So we have actually been profitable this week on the GBPUSD, despite the fact that we saw price action floating above our accumulation zone. Remember, at the beginning of the week, we had that accumulation zone around the 1.2800-ish, and we were thinking that price will actually go up at the beginning of the week, but unfortunately for the buyers, the reverse was the case, as price action kept on finding lower lows and lower highs in this particular market. Now, for those who are not part of us at the beginning of the week, let me run through the 4 hours time frame and show you quickly what it was initially looking like at the beginning of the week. Now remember, on the 4 hours time frame, and of course if you had watched my video on the GBPUSD, the link is in the description box of this current video, and they are duly timestamped so you can easily navigate to whichever aspect of the video is of your interest. So the first thing we noticed here at the beginning of the week was our key level, which of course is at the 1.28500 level. And remember that you know how we use our key levels, of course, by now. When price action remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. And if price remains below the key level, we want to be looking out for structures and patterns that will support the idea of selling. Now, coupled with the key level here was that accumulation zone, where we saw how sellers were struggling as soon as price action got into that area in the last couple of weeks, giving us a clue that this is an accumulation zone where participants gather momentum for an uptrend continuation. And for the fact that price action was above that area, this was where price action was at the beginning of the week. We were thinking that price will continue to the upside. And as a result of that, we had a buy stop order above that area. So I want to go back down to the 1 hour time frame. I just needed to show you how important that area was at the beginning of the week. So because of that situation, thinking that price action was above that accumulation zone, we said we are going to be buying. So we had a couple of losses that day. Remember, we had a loss here. We had a loss here too as well. Thank goodness we were able to recoup that loss in seller speaking, like we always do anyways. So we saw our price was ranging and we took advantage of that bullish momentum, but unfortunately we were taken out of that position. And as you will see here, price action dropped into the 1.28450, triggered our first sell position. Then we kept on adding more position as price action went on to break down the levels we identified during the week. So we had the 1.28150 where we added more positions. Then we also added more position at the 1.27780. Remember, then we also added one more, had the 1.27480 level, capitalizing on that bearish move all the way to the downside. Now, during our live session yesterday, this was what we were seeing here. Remember, we were selling yesterday, and of course, we told you, I was saying someone was asking if we can sell below the 1.2658850, which I told you I don't need to because I already have multiple entries on the GBPUSD, but you can as well take advantage of that move. And in fact, that level was broken to about 60 pips and price hitting my TP target. So I had my TP target around the 1.26400 level, and I had over 400 pips on that single move all the way to the downside. Now, congratulations to everyone who has been part of this profitable journey. Then one of the things we acknowledged here yesterday was a lower high, which gave us this descending trend line we saw. And one of the things we said here yesterday is if price action breaks out of this trend line to the upside, then we are going to be getting ready to buy. And to help us guide that bullish momentum, remember we had this key level identified at the 1.2700 area. And in fact, we saw the breakout happen. So if you had missed out on that one, the market came back to retest structure, and you see what happened. Price action climbed to the upside. Now, one thing that is of concern on the GBPUSD for me right now is the fact that despite the interest rate hike, we're yet to see that momentum from the pound sterling. Remember, when interest rate hike happens, majority wants to bet on that asset, on that currency, invest on that currency more because of the high yield in return. But since the interest rate increased, though we had some bullish traction, but it didn't last long. As you will see, during the early hours of today, we saw selling pressure resume again, bringing price back into our entry point. So at this point, have been taken out at break even on the single position. And of course, you should be out of this trade by now. And if you're still high in this trade, then no problem. Let's see how the market will trade. But I would advise you just stay out of it, and let's see how the market will react to the 1.2700 area to decide what our next line of action will be. But at this point I still think the reason why we're having this slow traction in bullish momentum for the pound sterling is probably because of the precautionary measures participants are taking at this point, especially when we are anticipating a major event like the NFP data, where we want to see what the outcome will be to give us a clue of where price will likely be going for today. I think that is probably the reason why we are having this kind of scenario here. Now, with the situation here, I will advise us to remain patient, as the 1.2700 level is going to be our center of focus for today. Now, it depends on depending on how price action reacts to the zone will determine where we are going to be going for today. So one of the things I want to be looking out for here is this: if price breaks down the 1.27 and a couple of retest of structure happens here, then I want to be looking out for selling opportunity. And of course, this confirmation can be revealed on the lower time frame. So you want to check your lower time frame for that one. However, if we begin to see buy pressure around this area, something like a double bottom structure, then we have our neckline marked out. Breakout of the neckline will definitely welcome buying opportunities, and we can capitalize, maximize on that bullish move by adding more positions at the key levels we identified here. So you do want to be marking out those levels on your chart, as you will be needing them as a point of reference to make your independent trading decisions today. So mark out those levels on your chart. Let's see how the market will react to the 1.2700 level to give us an insight into what our next course of action is going to be. So these are my views here on the JPU as a very simple. Let's see how the market reacts. And if you feel you are done for today on the GPU, as it's quite okay. We've been profitable so far this week, so you can afford to stay clear of the market and wait till Monday to join the new trend. So if you have any questions whatsoever regarding what I just explained, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right in the next asset on our watch list. So the next financial asset on our watch list is the XAUUSD, popularly known as the gold spot, and of course my favorite asset amongst the assets on our watch list. And it has been quite a very interesting week so far on the XAUUSD, as we also were able to scoop in a significant amount of profit on these assets. Though we had buying opportunities, we also had selling opportunities, and all of which went on a very positive note for us. So let's do a quick recap of how the week started for us all here on the XAUUSD. And at the beginning of the week, though price action started on a very strong bearish note, as we saw lower lows and lower highs at the beginning of the week. Now something interesting happened here. The market gave us a clue of what is likely going to be happening as we begin to see buy pressure resume around the $1,953.50 level to give us an insight that we could be seeing an accumulation phase that will incite a bullish momentum. And coupled with the ascending trend line, remember we saw this ascending trend line as well. Hold on a second, so let me highlight it quickly. So we saw this ascending trend line too as well, and we saw the sharp rejection of this candle here, giving us something that looked like an hammer candle, which from a technical standpoint is a strong signal that buyers are still very present around this area. Now with this situation here, we decided to capitalize on a bullish move if price action ever breaks out of the $1,956.50 level, which of course we did, giving us our first buy position for the week. And we rode that move all the way to the upside. And in fact, we maximized the potential of that move by adding more positions at the breakout of the $1,960.40 level. We also added more at the breakout of the $1,963 and then the 1,967 area before the bearish momentum began. And if we have moved our stop loss accordingly, you must have been able to scoop a minimum of 200 pips on that single move. So it was quite a very good start to the week for us before that bearish momentum happened. And sincerely speaking, I told you that I missed out on that bearish momentum, as I was thinking that this could be a retracement of that bullish momentum that started the week. Now on Tuesday morning, we noticed our price action came back into that entry point. Remember, this was where we had our first buy at the beginning of the week. That was the 1,956, and coupled with the fact that it also shares a confluence with that ascending trend line, we were thinking that price action will continue to the upside. And remember, for those who are profitable this week, I told us all that we are going to be having a buy stop order above that area to capitalize on that move, which of course was triggered, and unfortunately we were taken out of that position in a loss. Now, what happened afterwards was the second scenario we projected. You know, when we have this kind of situation, we always say that when price breaks down and retests the ascending trend line, we should get ready to sell. We saw the breakdown. Price came back to retest, and with a sell stop order below the 1,953, we were able to capitalize on that bearish move. And since that moment, we have been selling the XAUUSD all the way to the downside. And in addition to this current market structure was this descending trend line that has been supporting that bearish momentum since the beginning of the week. As you will see, we had this trend line, and at every point in time, price action has respected that descending trend line to further emphasize the strength of the sellers in this particular market. And as long as price action remains below the descending trend line, we have no business considering buying an asset. So with the situation we have here, price action still remains. Let me adjust this a little bit to capture the week. So price still remains below that descending trend line. Now, in the last 36 hours now, we have seen an interesting scenario in this market as price action has fallen into a range between the 1,938 and the 1,934 level to give us an insight into the level of indecision at this particular point in time. And with this kind of scenario, it is very, very important that we exercise patience to see where price action will be going, which of course will be coming in the form of a signal that price will either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, I think we had a new chart which we used to guide our trading activity yesterday, and for those who are with us during the XAUUSD live monitoring window here, where we monitor the XAUUSD live right here on the XAUUSD, we had a new setup we said we were going to be using to guide our trading activities for yesterday, and this is what we were able to come up with. A very, very simple setup here where price action has been confined within the 1,938 and the 1,933 $1.50 level. And for those who had been with us during the XAUUSD live monitoring window here on YouTube, remember we took advantage of the breakdown of the structure yesterday of the $1,933.50 level, and since yesterday we're still in that sell position as sellers are still struggling around this area. So going into the New York session today, well, I think one of the reasons why we have been witnessing this consolidation phase is simply because of the anticipation of the NFP data, as participants are still not sure where price action will be going, and major key players will be stepping aside to wait for the major event to come to give a clue on what to do with their funds. And as a result of this, there is low liquidity in the market, and in return, we have a consolidation phase right now. So we have a sell position running, which is currently running with about how many pips right now? Let's see, about 6 pips in profit at this point in time, which is not that significant. But I'm beginning to think that sellers are losing the steam, as we can see price is yet to break down the previous low. Remember, we had some sharp rejection of the 1,932 area. We saw the sharp rejection of the zone, and in the last 12 hours, we can see price is yet to break down that zone, giving us a clue that buyers are, there is indeed a real struggle between the buyers and sellers in this market. Now, before we go into the detail here, let me run through my commentary on the XAUUSD, as this explains what we are going to be doing to manage our position for today. And for those who are with me on the TradingView and Telegram platform, you will definitely have gotten this update, so you are familiar with what our plans are. And for those who are not, let's run through this quickly and see what I indeed said here. So this is how we have been managing the XAUUSD since the beginning of the week. And so this morning, okay, this was the update yesterday. We were seeing some traction in the bearish momentum, but as you will see, price is not really moving that much. So I said here this morning that our sell position from yesterday's trading session is still active, currently showing approximately 12 pips in profit. So it was 12 pips at that point in time when we made that sell order yesterday. So I said here that the prolonged consolidation phase reflects the prevailing market indecision leading up to the NFP data release. We plan to delve into this market structure further during our upcoming live session this morning. So going back into the chart right now, we are at a really dilemma right now. The market is in a limbo, and I think that a huge traction will not come in until or prior, probably like 15-30 minutes into the NFP data, where some players in the market will have already have an idea of what the data is going to be like, and then we can see their trail in the market to capitalize on any move here. So on the XAUUSD, I will just say here that we should just remain patient, hold on to our sell position, and let's see how far this will go. And if there are any new setup that comes up along the line, I will definitely share it with you on my public platforms, of course, the TradingView and the Telegram platform. So let's see how this will play out. It's still in a limbo right now. Let's wait and see, and we shall capitalize on any opportunity that comes up online. So that's my view here. We are holding on here to see how the market will play out. Then if we do have a breakout of the 1938 level, I talked about this during my live session yesterday, that a breakout of the structure, if it does happen, remember, we are not getting too excited. We will need some confirmations to happen, like a retest of structure right on our lower time frame before we jump into this position. But if we begin to see a huge traction in favor of the XA of the gold, that is, we start seeing higher highs and higher lows, then we can in fact have a buy stop order above the 1938 to capitalize on that move. But I will be giving you updates as at when due on my public platforms. So these are my views here on the XAUUSD. If you do have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the last financial asset on our watch list for today. So you can as well take that time to mark out these levels on your chart, as you will be needing them as a reference points to guide your independent trading decision. I see your comment, Guyan. Thank you for the compliments, and I'm very glad to have you around. Are you new with us, Guyan? Let me know in the comment section. I think this is my first time seeing your comment. Let me know if you are new with us. You're welcome, Guyan. Thank you very much. All right, so in the absence of no questions, I want to assume that we're all on the same page here. So I will be moving right into the last financial asset on our watch list for the week, which is, which one is that again? Okay. So the next asset on our watch list for today is the USDJPY, the final one. And the USDJPY, we have been buying these assets since the beginning of the week. I think it's only at one point in time that we had a sell position and it was taken out. One of the positions was taken out at break even, and one was taken out with a small loss, and that was on Wednesday, I think. So I want us to run through how the week has started for us here on the USDJPY to have a background knowledge of how things has been going so far. And you can as well use that knowledge to understand how price action decides our trading decision in this community. Now, at the beginning of the week, we had our key level at the 141.00 level. I shared this in my video on the USDJPY, and for those who haven't watched it, please do, so that you can have a background knowledge of how we got to identify that level as our key level for the week. The link is in the description box of this current video, and they are duly timestamped so you can easily navigate to whichever aspect of the video is of your interest. So at the beginning of the week, we saw this interesting range where price action was confined within the 141.150 and the 140.700 area to give us a flat channel to work with for the week. And you know how we do it. Whenever we have a flat channel like this, we want to wait patiently for a signal to come, either in the form of a breakdown of the support line for an opportunity to sell, or the breakout of the resistance line for an opportunity to buy. Now, unfortunately, this whole channel was formed during the midnight in this part of the world here, so I actually missed out on the breakout of that 141.150, and for some of us who took advantage of that opportunity, it was a great opportunity for us. So when I woke up on that day and the UK session, earlier in the UK session, this is what we were able to come up with, as we saw price action had already moved about, let me see how many pips was that. Price action had already moved about 70-75 pips thereabout. At that time we saw this setup. So we said here that we are going to be anticipating an uptrend continuation if price action does break out and in fact retest the 141.950, since that was our first position for the week. And you saw what happened. We saw the breakout retest of that structure, and since that moment we have been buying the USDJPY. And remember, we also maximized the potential of that move by adding more positions at the breakout of the 142.480. Then we also added one more, had the 142.845 here too as well, till price got into that structure. And remember, we had this ascending trend line right there on Tuesday. Sorry, is it Tuesday or Wednesday? Which we said we will be using it to guide our trading activity. And as long as price remains above the ascending trend line, we look out for buying opportunity, and the breakdown of the trend line will definitely give us an opportunity to sell. Now look at what happened here on Tuesday's trading session. Sorry, Wednesday morning, we saw the breakdown of the ascending trend line, and it was at this point we took advantage of the sell position as soon as price broke down the 142.860 level. As you will see, that move did not last long, as we were taking out. The first position was taken out at break even, while the second position was taken out in a loss. As you will see here, then price action climbed up again. And during our live session on Wednesday, we were using this ascending trend line as a guide. As we said, the breakout will welcome buying opportunities. We saw the breakout happen, retest, price moved about, how many pips was that? About 70 pips. Then it dropped again to the downside, breaking down this ascending trend line here. Now, the breakdown of this ascending trend line would have triggered some sell positions too as well. But one interesting thing about this current structure is that as soon as price action got into the 142.44-ish area, we begin to notice buy pressure around this area. And in fact, I made mention of this during our live commentary this morning. Sorry, my commentary this morning. Let me run through that quickly so that we can all be on the same page here. So this was my commentary on the USDJPY. For those who are with me on the TradingView and Telegram platform, you definitely would have gotten this update. So I talked about, hold on a second, yes, right here. So I said here, the bearish momentum that caused the initial breakdown of the ascending trend line seems to be losing steam, as buying pressure has been consistently present around the 142.400 zone for the past 19 hours. Given the current situation, we will be on the lookout for potential buying opportunities upon a breakout retest of the 142.850 level. On the other hand, we'll only consider selling positions if price action convincingly breaks below the temporary demand zone identified on the 1 hour time frame. So now let's go back into the live chat and talk about what I was saying here. So the first thing we observed this morning while trying to dissect where price action is likely going to be going for today is the fact that this area had become a temporary demand zone. As you will see, despite the strong bearish momentum we witnessed in the last 24 hours, we can see how sellers have been struggling as soon as price action got into that 142.4, 142.5 area, giving us a clue of how strong the buyers are around that area. Now, if we compare this level with what has been happening since the beginning of the week, you will see that the same thing has always been happening. Looking at what happened here on Wednesday, we saw buy pressure around that area, and in fact on Tuesday we saw our price action did break out of that area after some couple of rejection by the sellers around that area. So now for today's trading session, you will agree with me that that zone between the 142.500 and the 142.400 is a very crucial area that will be determining how price action is going to be moving for today. Now, with this information we have gathered right here, how do we intend to capitalize on any potential move? Now, to help us guide our trading activity today, I've been able to identify the zone. I've marked it out as a temporary demand zone, at least for the meantime. Let's see how the market will react to the structure as we continue to see the buy pressure here. Now, to capitalize on this bullish move, I want to see price action break out of the 142.850 to give me a signal that we are good to go, where a retest of structure will welcome buying opportunities in this market. Now, for those who are already profitable in the week, just like me, and you've been maximizing on this bullish momentum since the beginning of the week, then definitely we can leverage on the profit we had made so far this week and test what is above the 142.850 to see if a bullish momentum above that level will work. Now, definitely we want to be having our stop losses, of course, very, very important, close to the key level or below it around the 142.500, which will be dovetailing between 33 to 38 pips stop loss on that one, which is not bad at all. So let's see how the market will play out, and if it continues to climb and find new highs, remember we have levels at the 142.460 where we want to be adding more positions, and the breakout of the 143.800 will also welcome more buying opportunities in this particular market. So let's see how the market will play out in that regard. Now, in as much as we're looking out for buying opportunity, remember we don't normally ignore the potential of the opposite direction too as well. Now, with the situation we have here, we need to also consider the potentials the sellers to have within this area, especially after considering the strong bearish momentum we witnessed here in the last 24 hours. Now, if we take a look at that impulsive bearish move to the downside, which has led into this consolidation phase we've noticed around this range here, it is very likely that this structure could transition into a downtrend continuation pattern, and it's looking like a bearish rectangular pattern, or you can call it a flag pattern if you want to. Now, with this situation here, a breakdown of the 142.500 will definitely be a beautiful signal that sellers might likely be coming in. In fact, a breakdown of the zone would have taken out all the buy positions here, and in fact I would like to see some confirmations before I want to jump into a sell position here. So if a breakdown happens, then we want to look out for retest of structure to join the downtrend continuation. Now remember, we are not selling the USDJPY unless the 142.500-ish area happens to sell this asset for today. So let's keep this in mind. Mark these levels out on our chart so that we can be able to reference it whenever we are about to make our independent trading decision for today. So our center of focus for today is simply between the 142.850 and the 142.500 area. We are depending on where our price action reacts to this level will determine how we are going to be capitalizing on a trading opportunity here. So mark these levels out. Let's see how the market will play out on this area. So it's on this note I would like to call it a day here. It has been a wonderful moment, and in fact we were able to simulate all the potential trading opportunity on the asset on our watch list: the GBPUSD, USDJPY, XAUUSD, and of course the USOilSPOT. So I'm very confident that we will be able to capitalize on any of this potential opportunity that comes up much more later in the day. And of course, I will be with you in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. And please, if this video, if this content has been of immense help in making your independent trading decision on the asset we have talked about today, please kindly support this project by clicking on the like button. Your likes are very, very valuable to me, and in fact it also will help the YouTube algorithm to notice this video and push it to a wider audience of traders who may find this content beneficial to them too. Thank you in advance as you do so. Thank you very much in advance as you do so. Then that reminds me, we are going to be having the XAUUSD live monitoring window about 10 minutes into the New York session today. The XAUUSD live monitoring window is a platform where we come here together to see how we trade the XAUUSD live right here on the YouTube channel. So I will be sharing the link right now. I'm just typing it right now. I think I have it. So you want to be clicking that link, and then when you click it, you click on the notify me button so that when I come on live, you will be notified that we are right online. So be part of the session, engage in the comment section, and let's see how we can take advantage of the NFP event that is coming up much more later in the day. So thank you very much, everyone. And on this note, I wish you best of luck during the London and the New York session. And I also wish you a wonderful and merry weekend as we look forward to the NFP data today. And don't forget that on Saturday and Sunday, I normally share our plans for the next week, our watch list for the next week. So join me on this channel, subscribe to my channel so that you will be able to get notifications whenever I share these updates on this platform. So thank you very much, everyone, and I look forward to seeing you right in the comment section of the XAUUSD live monitoring window. Do have a wonderful evening, everyone. Okay, I see your comment, Richard. I'm very grateful. Thank you very much for wishing me well. I really appreciate it. All right. So do have a wonderful weekend, everyone. Bye-bye.